In this episode, my friend Mary Jo Irmen flies in from the frozen tundra up north, sits down with me and shares with us her experience with becoming your own banker, the infinite banking concept. She's an author of a couple of books. She's a speaker. She's active on social media, and she's an NNI practitioner. We had fun catching up and reminiscing. Hope you enjoy listening. Thank you. Welcome to the Bank of Life podcast. I'm your host, James Neathery. And you know, I'm always excited when I have guests, and I'm really excited, extra excited when they come in to the studio, and today's no different. I have my friend Mary Jo Irmen from the frozen tundra up north. She flew in, going to do a little vacation, looking for a venue in Fort Worth, and carved out a little time to come down here and visit. So welcome, Mary Jo.
Thanks.
How are you?
I'm fantastic. There's no snow. It's great.
No, it is cold though. 40 degrees.
Yeah. It's going to be 50 today, and we're going to have our sweatshirts on.
Yeah? That's shorts weather for y'all, isn't it?
Yes.
Yeah. Okay, so most of you probably know or have listened to Mary Jo. She's written a couple of books, Farming Without the Bank and then Without the Bank. And I'm like, Mary Jo, why do you have two books? I didn't know, because non-farmers, if they hear farming without the bank, they think it doesn't apply to them. Mm-hmm. Is that right?
Yes. So the second book is Life Without the Bank.
Life Without the Bank.
But all of my social media is without the bank.
I got you.
Yeah. But
so did you just go through the book and mark out farmer, or what'd you do?
No, it is about 80% the same book.
Yeah.
But Life Without the Bank has more why you should not be putting your money into a 401k, IRA, more of the numbers, taxes, penalties, that sort of thing. Yeah. And then why you shouldn't pay cash for your kids' college. But the majority of that book is the same. Now, I had somebody tell me the other day, well, that Life Without the Bank book is better than the Without the Bank, or the Farming Without the Bank. And I thought, well, that's a first. But, you know, it's each to their own. I mean, we've sold 20,000 copies of Farming Without the Bank. Wow. So it's not, I don't hear a lot about Life Without the Bank.
Yeah.
But it is not to replace Nelson's book.
Becoming Your Own Banker. Right.
It will not replace Becoming Your Own Banker.
Yeah. Well, look, tell us, for the listeners and the viewers who, you know, haven't heard or read your material, you know, tell us a little bit about yourself. What even brings you here? I know, you know, well, I know what I know, but they don't know what you know. So enlighten us.
What brings me to Texas, or what brings me to IBC?
What brings you to IBC? You know, how did you become exposed to the idea that you could become your own banker? And, you know, give us some background.
Well, it was 2010. Yes, I think it was November of 2010, to be exact. I found out about infinite banking, quit my job 2 weeks later, and said, well, who's not going to believe this? Because this is awesome.
That's pretty bold. You hear about it and quit your job?
I had been looking at penny stocks and the stock market, and I had already been going down that real estate road at 24. And I was reading all that stuff.
She's dating herself now.
I was reading all that stuff, but I couldn't get my hands on how to do it, because I was a Dave Ramsey, Susie Orman fan. So I had to have everything paid off. And, you know, my kids. Bad. Yeah. And my kids would call me Mr. Krabs, because I was picking up pennies. I was doing everything to get ahead. And I couldn't, you know, my husband could not see the value of rental properties. And I wanted my debt paid off, because that's what they said we're supposed to do. But then how am I supposed to implement Robert Kiyosaki's theories when I'm not supposed to have any debt? And I was just stuck. And this came across, and I thought, well, there's the answer to everything I was looking for. So I quit my job and thought, well, everybody else is going to see that, but nobody else cares about money, James. So therefore, I kind of starved for a while. You know?
So you were already an agent, a life insurance agent?
No, I hated life insurance. I was an insurance agent. I was a P&C agent.
Oh, okay.
And I would not get my life license because I did not like life insurance. I didn't understand it, first of all.
Being a Ramsey follower?
No, I would give them to somebody else in the office. She was licensed. I'm like, there you go. No, I didn't follow Ramsey. I followed Ramsey's get out of debt piece,
Okay.
but I was not super fan.
I got it.
Okay, I didn't drink all the Kool-Aid.
Some of it.
Just some of it. I just took little sips. and so then I did that I started IBC in December of 2020, and I went to my first think tank in February of 2011.
Wait. We went from 2010 to hearing about it. Don't skip over the whole 10 years.
Well, then I went to my first think tank in 2011, and I believe you spoke.
I did? Okay.
Yeah, I mean, you speak every year, but I'm pretty sure you were one of the first speakers in 2011. And then it's just grown from there. And
so you became, so you're already licensed, you went and got your life license, and then you got involved with the Nelson Nash Institute. That was prior to, the Nelson Nash Institute came into existence since 2012, I believe. So you were going to think tanks, and
yeah, I've only missed one think tank. And then I was teaching it, right? I mean, I was teaching IBC just like every other agent teaches IBC, and going to all the think tanks and learning from people like yourself, all the masters that have been around since the beginning, because there's not that many of you.
Hey, man, don't date me.
The beginning of IBC.
Yeah.
And then I decided that, who am I going to work with? And I liked farmers because that's where I grew up, as a farm ranch.
Right.
And so I decided I'm going to work with farmers, but then they didn't believe me, and they said I don't know what I'm talking about.
Because you were young,
I wrote the book. No, because they didn't think I understood.
Insurance?
Farmers didn't think that I understood their operating costs.
Oh, okay.
They're like, oh, there's so much capital that we need, and this isn't going to work, and we're never going to get away from the banks.
Yeah.
And, they think it's all has to happen overnight.
Right.
And as if they grew their operation overnight.
Right.
And so they would not believe me. And then I thought, well, I mean, I'm kind of ornery, so we'll just meet ornery with ornery. And I wrote the book. And now, I'm not meeting with you unless you read the book. You either read my book or you read Nelson's book. Better, you read both of them. And then you listen to all the podcasts, and then you should know what I'm talking about when we get into a meeting. And once they could see it with their language of operating and equipment and cattle and all of that stuff, it made more sense to them that, oh, maybe I did know what I was talking about.
A lot of money, and then it's like selling cattle, the fertilizer, the grains, the feed. They don't write checks for that all in one day. It's kind of spread throughout the year.
And their costs go up and down.
Yeah, mainly up, right?
Right. But a lot of them, this is what I have found. And I know you work with farmers and ranchers as well. I find that they don't know their numbers. They have not run it like a business because that's not how it has always been run.
Yeah.
And so this younger generation is saying, hey, we need this in QuickBooks. I need to know we're making a profit.
Yeah.
I have farmers, a good farmer will know before he puts seed in the ground what it's going to cost him per acre.
Yeah.
And somebody else may not know that. And that there's a difference between, are you running your operation or are you allowing the bank to run your operation?
Who's that check made out to anyway? I mean, so so they've read the book. When did you publish your first book?
2014.
2014. Okay, and so they're obviously reading your book and then contacting you. Does the book help them see that they don't have to do it overnight? I mean, it gives them legitimacy. They get to read it. They get to see numbers. Does it help them understand they don't have to do it overnight? That it is, it's like how to eat an elephant. And it's like one bite at a time.
I made the same mistake Nelson made, and I put case studies in the book. And so they skip. I don't know if they ignore the first half of the book and they go to the second half and look at the case studies. I'm not real sure what they're doing there, but some of them will see it, and then some of them will say, oh, great life insurance sale.
Right.
Did you read the book? Did you get through it? And I love it when they call and they say, well, I didn't get to the second half of the book. I read the first part. I scheduled my appointment, but I didn't get to the second half.
And what do you tell them?
Well, fantastic, because that's where all the numbers are.
So they only have to read half. They only have to read half of the book for you to, not the whole book, huh?
Ideally, you read the whole thing.
Okay.
But the thought process, right? Nelson's book, BYOB, is the same thing. It is the first half of the book that is most important. And that, if they can get through that, we know that their thought process is already correct. Where are you cutting his book in half at? Where are you cutting BYOB in half? And when he starts getting into numbers, like for me, I did not understand the second half of Nelson's book because
the numbers, the illustrations,
right.
the graphs, and not the graphs, but they're tabular details from life insurance illustrations.
His
but
case
that's not a
studies,
life
essentially,
insurance illustration.
Right?
Yeah. But they got hung up in the numbers, though, not the concept.
Right. But I didn't understand the numbers in BYOB.
Right.
Because I was not in the financial world.
Most agents don't either. So.
And so I understood the first half of Nelson's book. I understood Willie Sutton's Law. I understood arrival syndrome. And that is the piece that I was like, this dude gets me. Like, this is everything I've been talking about. This is what my family's been talking about. Because I had an uncle. In the first page of Nelson's book, it says, if you take all the money in the world and you divide it equally, it'll all end up in the wealthy people's hands again, right? Mm-hmm. My uncle said that to us when we were kids. And I thought, that's interesting. And then I read it in Nelson's book, and I was done, like right there. I was like, that's exactly what my uncle says.
Uncle Nelly had it right.
Yeah. And so I did, but when I started reading his case studies, I didn't know what premium outlay meant. I didn't know what cash value meant because I didn't know life insurance. Yeah. And then when I got done reading his book, I was certain you were all going to jail because there is no possible way I did not know about this. Granted, there was no Google. It was Yahooing back then, right? And I couldn't find anything on the internet because the internet was kind of new. And so I really thought, there's no way this is legal. And then I looked it up on our state insurance website, and it talked about it. And then when I took it talked about using cash value.
Oh, okay.
Mm-hmm. And then when I took my test, it had questions on my life insurance test about using cash value. Mm-hmm. And then 6 months into the business, I got turned into our insurance commissioner because somebody thought I was stealing. Oh, this is a good story, James. Somebody thought I was stealing their kids' money. So the kids went home and gave the book to mom. She turned me into the insurance.
Oh, you mean like they're your clients and mom finds out. The kids are your clients. Mom finds out what the kids are doing, and then
the kids were potential clients.
Oh, okay.
Because the story gets better. So the kids were potential clients. They go home and show mom. The son and daughter-in-law go home and show mom. The insurance department shows up in my office with Nelson's BYOB book.
Really? Did they read it?
Yes. And the investigator says, well, I could see why people do this. But they were asking me if I was front-loading policies, if we were canceling annuities and front-loading policies. Mm-hmm. Well, I, at that point, did not even know what an annuity was because the person that was training me was not training me on annuities. Mm-hmm. I didn't know what front-loading meant. And so I learned everything that you can do illegally with a policy. But it was funny.
Trained or taught by an insurance commissioner's office worker.
So after
or investigator,
after I was, and it wasn't a complaint, it was a concern, right? There was no complaint to file because I didn't write anything on anybody. There was an inquiry, I think they called it. So
they probably just wanted to come learn about the infinite banking concept.
Oh, I had to send them all my policy stuff. They did a full-on investigation. Dude. So I sent them all my applications. They cleared everything, and I thought,
what do you mean all of your whole?
Like all the applications I had done over the last 6 months, we had to send all of those to them so they could make sure I was not front-loading policies or canceling annuities and then putting that into a life insurance policy, because I obviously asked a lot of questions. I did not realize that North Dakota is at that point was, I believe he said it was number one for insurance fraud per capita.
North Dakota?
We have had 3 insurance agents commit suicide due to taking people's money and not depositing the checks.
Really?
Yeah.
But that's PNC. It's not all life insurance.
Right.
It's
It was just PNC. Those were all PNC agents. But the insurance department isn't just life insurance.
Sure.
And so they're looking out for us. And it's a small state. We don't have that amount of people.
What's the population of North Dakota? And then number 1, I get it per capita.
I have no idea.
It's like, wow.
I don't even think we have 1 million in the whole state.
Wow.
Yeah. So
what's wrong with them people? I mean,
I don't know. Greed, I suppose.
Okay, so
that's a greedy business, right? That's why people don't like us, because they think we're greedy.
I don't know. I think people don't like me because I speak too slow and I'm maybe too direct sometimes. Other than that, I'm one of the nicest guys I know. I don't know. But no, life insurance agents and advisors, they're categorized and pigeonholed, and I'm like, I'm way over that. But of course, the financial guru has to say, oh, the life insurance is the worst place to put money, or whatever they promote, because that's what you ought to do, right? Whatever they're promoting.
Yep. So after they cleared me, I thought, well, I guess this is real. This infinite banking thing has to be real, because I didn't get put in jail and I didn't get reprimanded for anything.
How long? What year was that around? What was the time?
That was 6 months later. So it was 2011.
Wow, that's a high. How are you early on, huh?
Well, no, I lied. Yeah, it started at 6 months, but it took them a year it took them a year and a half to close that. We had to actually call the insurance department and say, hey, are you ever going to close this case?
Wow.
What are you guys doing with it? So obviously there was no concern.
Yeah. Did the couple have become clients, potential clients?
They did not. But guess what?
Have let them.
The son passed away without life insurance. 10 grand of life insurance.
That's terrible. Was he a young guy or?
31.
Wow.
Passed away without life insurance.
Was he insurable, do you think?
Oh, absolutely. He died in a snowmobile accident.
That's terrible.
And
did he have kids?
2 little kids?
Yeah, life insurance is a terrible place to put money. Yeah. And the old greedy agent's going to take it from you, or the greedy life insurance company is going to keep the cash value if you die and only pay out the death benefit and all the other nonsense that makes for good talking points.
Yeah. And then when he died, the mother-in-law who turned me in decided that she's not going to help the daughter-in-law pay for any of the expenses.
Oh, no way.
Absolutely, 100%.
And her grandchildren.
Right.
Wow.
So that's
a pure case of the pot. Oh, not pure, but yeah, of course. Grace for me and law for you. I'll judge you by my own character.
No. So they didn't have anything through work. They didn't have, he had whatever his 10 grand was through work.
That's terrible. But yeah,
so if nothing else, okay, so we're showing you how to use cash value, right? But with that cash value comes death benefit.
Can't buy life insurance any other way.
And I don't know, I'm sure you've had some claims. I've had 4 in the last year. When that client calls and says spouse or child passed away, the first thing that crosses my mind is there a loan on that policy? I hope there was not a loan on that policy.
Why? Just for the higher death benefit?
Yeah. I know they'll understand it, but it's nice to be able to give them that full death benefit.
I've had lots of claims over the years, and if there's an outstanding loan, there's an outstanding loan. It's almost like a prepayment of a death benefit. It's not. It's a loan against the cash value. I get it. But it's akin. If it doesn't come in the death benefit, it was paid in the form of a loan or accessed in the form of a loan. And something was done with that money, right? It's not like, of course it could have been squandered, but.
And if we use that money for, let's say that I have a client that uses that cash value for a land. That cash value it would have taken longer to pay that back. And they're going to feel that a little bit more than, I just used that for operating, but I have grain to sell yet, or I have calves to ship out. And so that money would come back a lot faster. I have had one that passed away from a loan with a loan on it. And it made me a little bit nervous because the eight children were beneficiaries.
Dude.
are 8 children going to understand that there was a loan on that policy and why there was a loan on that policy?
And what'd you do with the money, Mary Jo? Yeah, but they're all going to get along. All 8 of them are going to get along. There's going to be no issues. All the spouses, everybody's going to agree on everything, and it's going to be, hunky-dory.
It's going to be great.
Yeah. Oh, wait a minute. But the death benefit, they're paid in cash, right? Here's a checkbook for the death benefit. And I mean, that's a lot less complicated maybe than dividing up the farm 8 ways.
Oh, yeah. Yep.
So
it's not a bad thing, but it is the first thing that crosses my mind because I do want to be able to give them that bigger check.
Sure. I get it. That makes sense.
But it's not when you're meeting with a husband and wife, they both know that there could be a loan and it's not an issue. When we have a child that's maybe receiving that death benefit, there's going to have to be some explanation possibly of, hey, there was a loan. This is how it works. Because, mom and dad don't always share financial information like they should.
So did you, that's a great story. What a kind of a rude awakening early on to have the, state investigators show up and you're sitting there trying to do the right thing and mom or whomever the expert is, it's like, oh, that's fraudulent or that's not good. And then, did that hurt you, do you think, in business?
No, it just gave me confidence that I am doing the right thing.
Oh, yeah.
Because
sure.
I'm doing the right thing because the state came in, but I was turned in last year as well. So I've been turned in twice to our insurance commissioner. I know. So they call and they're like, oh, so-and-so has complaints. And I said, well, that's interesting. She's read the book. We've had 6 meetings. She can call me anytime. I don't know. This is not an investment. She kept calling it an investment. I'm like, this is not an investment. That is clear in the book. And this is the first time I had the legal office say, oh, well, you're just using the cash value. The lady in the legal department absolutely 100% understood cash value and how it was used. And she was like, yeah, you don't have anything to worry about. We're done here. And because you have the book, you have the meetings.
That's just a complaint right there. Right. It's like, not trying to diminish that, but, somebody got bent out of shape. And
But it's nice to know at the end of the day, does it suck to get a call from the insurance commissioner? Yes. Yeah. But I'm glad that they are doing their job and looking out for the residents. Because there are people out there that are not good people doing their job. And so when people say, well, why do I have to read the book before I meet with you? Right? Why do we have to read Becoming Your Own Banker before we meet with you? So you know what you're doing.
Well, quit getting those calls, man, from the state. It's like, my gosh. Are these people prior to your requirement to read the book?
No, that other one was just last year, but everybody's been required to read the book since like 2015.
Yeah.
I did not right away though. Not everybody was required to read the book.
Yeah.
And those are probably my most difficult clients because they don't understand IBC. They don't understand what Nelson is teaching. They're using it as a savings account. They ask about when they can stop paying premiums. But those same clients who don't read the book don't listen to podcasts either. And so if we're not listening to your podcasts, my podcasts, if we're not listening to those and continually being educated, which Nelson talks about, if we are not surrounding ourselves with those like-minded people, we are going to what? Forget why we have the policy.
Mm-hmm. Yeah, or just look at it as a premium, oh my gosh, it's another bill I got to come up with. And what's the insurance company charging me on the loan rate? And what's that dividend? 5% of what? Or 4.5% of what? Or 6, Yeah. Gina Wells, that's what I love Gina. So, you drag them in, you got to drag them around. And always, not always, but look, Nelson became a life insurance agent in 1964, all right, after, been buying life insurance since he was age 13. His daddy bought the policy on him at 13, gave it to him at 14, made him start paying for it. Okay. Forestry, think long term. And anyway, becomes a licensed agent in 1964, spent the first 15 years premium offset and his having the dividend reduce the premium, not premium offset. 15 years in his State Farm policy, right? 1959. Okay. The man didn't publish that book until 2000. Okay. He had the vision here in the 80. It's like 92 pages. How can you convey that much experience in an hour conversation? You cannot. Can't do it in 3 podcasts of an hour. I mean, he did a 10-hour presentation at, prior to his graduation. And that was literally going through his book with some anecdotes and just good Southern gentlemanly entertainment. He's very intelligent and quite funny. So why do you require somebody to read a book? Because there's no way an agent or an advisor can convey that much information in 1 meeting, 2 meetings, 3 meetings, 4 calls. It's really very important. And if they don't read, and I get it that, I'm quite impressed with like TikTok and Instagram and social media, how somebody can listen to a really good presentation and then be all in, but don't read or, and I'm like, man, that's a great marketer or a really good presentation, but you need to get to some real meat. And here's how you might consider reading this or watching that. I call it, I heard it the other day as the Jim Jones effect. Have you ever heard that? And a very smart individual in the life insurance industry, Larry. And he said, yeah, it's like the Jim Jones effect. We were talking about social media. And I'm like, what is that? Break that down for me. He goes, Jim Jones, it'll get you to drink the Kool-Aid, but it'll kill you. I'm like, oh, okay.
I think it's funny when they say, well, I don't read.
Oh, yeah.
But you were reading social media to find it? So you just scrolled TikTok and Facebook and Instagram for 4 or 5 hours? You could have had the book read, and there's pictures in it. So don't tell me you don't read. What you're saying is, I don't like things that have a bound spine. Because you'll read a magazine, right? But if it's in the shape of a book, apparently that's when we have an issue. Ooh. But you have to. It is your time, right? I have an hour and a half meeting with my clients for the first time to go through everything that they do. We can make that hour and a half productive, or I can sell to you for an hour and a half. I'd rather teach you for an hour and a half than sell you something, because anybody can sell you anything. You and I are not in the business of selling.
I sell myself anything between here and the front door. Okay. No, I hear you.
Because it's teaching, right? They can go get a life insurance policy with anybody, but who's going to teach them the concept and how to use it?
Yeah, I think so. You give an hour and a half call, the initial phone call, or Zoom, or however you practice that.
Yeah, and they just have to read the book first. I don't care which book it is. Great if it's Nelson's, because all the meat and potatoes are there, right? I do not touch on absolutely everything Nelson touches on in my book. It is nothing more than to accompany Nelson's book and to put things in English, Mary Jo terminology, because I didn't understand Nelson's book. So a lot of times if people read my book first, I break down all those columns that I didn't understand so that people can understand when they read Nelson's book. Because I didn't get it all. I mean, even right before Nelson passed, I had him in Bismarck speaking at a conference, and he was talking about tailwinds. And I'm like, oh, I get it. I mean, that's years into this.
Yeah.
I just didn't always get everything he said because he told stories. And just tell me. My brain's not that expandable.
You're slow, but you're worth waiting for.
I am. Thanks, James.
That's funny. So you broke down the columns and I don't want to say interpreting, but just in your language explaining what is going on in the columns. Yeah. Do your people read that?
Oh, yeah.
Or do they just read the first half? Did you put that in the first half or the second half of your book?
That's in the first half.
Okay. Just in case you quit reading halfway through.
That chapter is right before the case studies. So then when I read the case studies, I know exactly what accumulative premium means, what cash value means, what net death benefit means. I know what those columns mean to have it make sense.
Yeah.
Because I was not exposed to life insurance, and I don't want people like myself to think, well, this is too complicated. Because who makes everything complicated? Your investment brokers. And they make it so complicated that you think you need the investment broker. When in fact we don't. We just need to stop using fancy words. Like I love Ryan. Love you, Ryan. But
Great.
and Ryan knows this because I messaged him and I'm like, dude, I need a dictionary to talk to you, right? Ryan will have his perfect clients that understand Ryan terminology. Mm-hmm. I am not that person. I am just very simple. And I just want to help people that are looking for that answer. So.
She loves you, Ryan.
I do love Ryan. I told Ryan, I actually copied a paragraph. Ryan and I had a whole Facebook thread or a whole message on Facebook about this. I copied one of Ryan's paragraphs out of something. I don't know what some article he wrote, I think, or whatever he calls them. And
whatever he calls them.
I'm sure there's a big word for it. And I copied that. It was at grade level like 16 or 18 or something. And he laughed. And I said, Ryan, I'm being serious. I can't.
Stop laughing. I'm being serious.
That's hard to understand.
Oh, my goodness.
But that's
Did he break it down for you? Did he reinterpret or use
No, I was just telling him to stop using big words because I need the dictionary. And he laughed at me, and he uses big words because it's Ryan. It's okay.
Yeah, it is.
It's okay because we need the Ryans, right? For the people that are like Ryan. Not everybody is like myself or like you. Yeah. And we're going to do business with the people that are like us. And my assistants, it drives them crazy. Our clients are like me. Mm-hmm. They are not super organized. They do not have their numbers ready. They're farmers. They're going to talk to you all day and we're going to be best friends. But they are not.
Right.
They are not the most organized people, And it drives my assistants crazy because they're super organized. But that's why I love them. And that's why we get along so well.
Right.
I'm like, good luck with that one. Like, as soon as that one applies for insurance, good luck. He probably won't get his paramed done on time. He's busy. He's an entrepreneur. He's got 5 or 6 businesses going. Good luck with that one. Mm-hmm. But that's okay. I love him.
So an hour and a half, though, that's pretty generous, with the first phone call, I'm saying. I mean, it takes, for a client to come and, go through the process. I mean, everybody has a process. There's a lot of hours involved in that. And I'm not saying there's a lot of hours involved on being on the phone, but, there's a lot to that. Mm-hmm. Coming in, going through underwriting, case design, where you're at, what you're doing.
But that hour and a half is, an hour of that is where you at financially.
Yeah.
What do you have bills on? Where we need to go? Where are our goals? What is going on with you? Mm-hmm. And I have found that very few agents do that. Mm. They just come in and say, well, how much do you want? How much life insurance do you want, or how much premium you want to pay? Yeah. And they don't look at their full scope. I mean, I had clients a month and a half ago that I was the 5th agent they talked to.
Yes.
And I typically don't allow that. Like, you've already talked to 5, I'm out. I'm not. And then I ask.
Four's your limit.
I ask who it was first.
Oh, okay.
Right. Because if somebody comes to me and says, well, I've talked to other IBC agents and they say it's James, I'm going to say I'm out. James knows what he's doing. If you can't work with James, then we're probably not going to work well together either. Yeah. But none of these agents did I know. Not one of them.
Were they IBC agents or just life agents?
Of course not.
Yeah.
No. Well, one of them was. One was, sorry. So 4 were not, one was. And I went through all of their stuff and they said, nobody has done this for us. Nobody has sat down and done that. Yeah. Now we know how much premium to pay because they were putting $100,000 in a policy already. And they wanted to stop putting money in that policy and start a new one with me. And I'm like, absolutely not. Right. That policy can hold it. Why would we stop funding something that's just getting going? Yeah. Why would you start over?
Because they don't know.
Right.
And half the agents, I don't know what an agent does or even why they do things. And I've got nothing but love for agents. Okay. I'm not, but it's quite common that they don't know or they don't understand what they can do. And that's just the way as a consumer, that's been their experience. Well, I'm going to stop that and do this, whatever that is and what this is. And they apply that to life insurance. And when you have a mutual policy issued by a mutual company, most of the time, it's not in the client's best interest to replace it. Mm-hmm. Most of the time. Now, there's always that one outlier, whatever's outside the curve, but that's their mindset. Mm-hmm. Stop this and do that. And a lot of agents, I'm sure, would let them and help them do that.
Oh, I mean, think about it. That was $75,000 in commission. That I could have said, or not commission, sorry, $75,000 in premium.
My gosh, who are you riding for?
Sorry, $75,000 in premium that could have gone to a new policy that I could have made some commission on.
Yeah.
Why would I do that? Why would you not just keep paying what you're doing? Yeah. Because I think we were in year 4 or 5. So keep paying that premium because the snowball just started. Mm-hmm. Get it, keep it. Keep it. I don't know. I mean, there are a lot of people I talk to that I don't even do. I'm like, we can't do anything. Keep doing what you're doing. Mm-hmm. And then once we have more money, we can start something. But I can't do anything for you now because it's actually going to be worse. I'm going to hurt you by starting something new. Then you just keep doing what you're doing.
We hear that an awful lot too, though, going back to, why are you asking that? Or why does that matter? And no, it all matters. What you're doing and all of that matters. But we hear that quite often. It's like, the last guy just, how much face amount or how much premium do you want to pay? They didn't ask, this or this and it's kind of crazy. Mm-hmm. I'm like, wow. Kind of goes back to that Jim Jones effect. You hear a really great presentation and you're all in and your existing financial, historically, what you've been doing, the direction that you're going, what you want to do, and that all matters. Mm-hmm. And to not know that, how can you ever give a proper recommendation or, consider, you should consider this or whatever.
Or even working with business owners and farmers. What's happening in the family? So many, it's funny that I am not a licensed psychologist. I do not
practice for free pro bono
therapy. Huh? But it is crazy how many of my meetings basically end up being therapy meetings. Like, what do I do, Mary Jo? Do I stay with the family farm? Do I leave the farm? Do I stay in the business? Do I not? Or they'll say, well, I'm farming. And then I say, okay, my question is always, how many siblings do you have? Oh, I have 3. Non-farming. Yep, they don't farm. Who gets what? And sometimes they don't want to answer that question. Sure. I'm like, no, that has to be answered. I cannot do what I'm doing here if I do not know the family dynamics. And if one of those family members is going to be manipulative and have mom re-sign stuff when dad passes or find the parent without the backbone.
Sounds like you've done it before, Mary Jo.
I need to know that because we need to make sure we're insuring the right people. Right. And it's very interesting how most people don't go there. Mm-hmm. But working with farmers, family is always a big thing. Even more important probably than business owners. Mm. But because business owners, they'll pass it down, but there doesn't seem to be as much fighting.
Well, they'll have families too. The business
Yes.
owners.
Oh, yeah. I asked that question, but there doesn't seem to be as much drama as there is on
they maybe
the farming side.
Know, but maybe they've addressed some of those things because it's a business situation.
Right.
Where, not that it doesn't happen in business, but there's an awful lot of assumptions sometimes in the family dynamic. And, we can talk about this, but not that. And,
right.
He's the older, she's the youngest, or he's doing all the farming, or she's doing all the farming, and they're doing this. It can, with 8 of them, it could be really complicated.
And sometimes they don't.
16.
Sometimes they don't want to tell me.
Yeah.
And I get it anyway.
You do?
Absolutely.
You just put them in the headlock and drag it out.
Virtually. Yeah. I mean, I will get it. I get that you don't want to throw your siblings under the bus. I 100% understand that. And I'm going to honor that. But you don't have to tell me that they're the most impossible people to work with, but are we going to have issues? Yep. Okay. Then I just plan for us having issues.
Yeah.
Because some people think that their family drama is the only family drama. It's always funny when you get that client that says, "Oh, we are really different than anybody else," and then they start talking. You're like everybody else.
I think we all suffer from a little bit of that. My case is different.
Yep.
I think,
and when in fact we're human.
Yep.
And so everybody's family has issues. It's just a matter of what is the issue and how do we deal with it.
So how long after an hour and a half and y'all determine, what do you do within an hour and a half? You get the family dynamic, you get the financials, you ask all the appropriate
questions. Then we talk about how the policy is structured. We review how loans work. We talk about company, if we get on the subject of companies, they have the right to ask whatever they want at that point because I'm here to teach. And then they get to decide if we need another meeting, we do. Otherwise, there's no point in going any further if I don't know if they're insurable. So then we do applications.
All right.
If they want. If not, schedule another meeting or sit and talk about it. Listen to more podcasts, whatever. If it's not right for you, it's not right for you.
Yeah. Who do you listen to on podcasts?
For infinite banking?
Yeah.
Nobody.
Nobody at all? You don't even listen to your own? No.
Oh, that's awful. No. And I'm like you, James. We didn't prepare, right? No. So I have no idea what I said. People are like, oh, you said that on this podcast? I'm like, I have no idea what podcast that was. I don't. Once in a while, like if you guys have something that I've run across a lot, then I'll listen to see what your take is on it. Or I will listen to Infinite Wealth once in a while. It seems like a lot of IBC podcasts have gone real estate heavy, and I'm not a real estate. I don't do a lot of real estate stuff.
Facebook says different, young lady. Yeah. You're like buying this and that, and then remodeling it too, man. You're in the remodel business. I'm like, yeah. But so they've gone. They've gone more real estate heavy, where it just doesn't necessarily apply. Yeah. Now, if I have somebody with real estate, then maybe, but I have very few real estate moguls out there. Those are typically not my clientele. So I listen to everything kind of but IBC. When I need something, I'll reach out and be like, hey, James, I got a question on this. Yeah. Or, hey, so-and-so, I got a question on this. Like I've made, being an NNI, you get access to the best. And so I get to reach out to J-Lo. I get to reach out to you. I can reach out to Justin. I can reach out to all the seasoned practitioners that spent a lot of time with Nelson. Because if I want information kind of at this point in my career, I want it from people that spent the most time with Nelson. Yeah. I know. I remember the last time we had a conversation, it was about an hour and a half. I'm like, my gosh, man, it was a long time. But it might have been some time between conversations, but it went by really quick. But I'm kind of the same way. I don't listen to this podcast, and But I get sent stuff all the time. I'm sure you do too. And
Yep.
hey, what do you think about this? Or is this right? Or is this wrong? Or, this guy's saying everything but the infinite banking concept, becoming your own banker and mentioning Nelson's name. And, but.
Yep. It is and there's so many podcasts right now about IBC that it's tough. And I know here's the other thing. If I'm going to listen, it's because somebody sent me something, exact same thing. And they have a question on why somebody said X, Y,
and they force you to watch it so you can answer the question.
Yeah, it's okay. I do everything in double time. So
oh, okay.
I just speed it up. It doesn't take that long.
Right.
However, it is always interesting to kind of hear what other people have to say. But even your podcast, like I've listened a couple times and said, hey, James, okay, you said this. Are you, you're really not buying real estate with it, or you are going to the bank, or clarify for me what you're doing? Because as a practitioner, I want to do it right.
Yeah.
Right. And I want to make sure that I'm doing it right. And I'm not just doing what I heard from one other person. I want to do my due diligence and then see what fits me, because not everybody's financials are the same.
Right.
Not everybody's thought processes are the same.
Right.
But yeah, there's a lot, and I feel horrible for our consumers because they are bombarded with it. And if we can it seems like everybody within NNI uses the same terminology, explains it the same. But can you imagine being a consumer just learning about it today, and you have 15, 20 podcasts out there that are all saying something different? And I just did a podcast on this. Who do you believe and who do you trust? That I feel terrible for them, because when we got started, there wasn't TikTok.
No.
There wasn't really. Facebook was there, but there was only one practitioner at the time on Facebook. And that was it. Everybody was doing live seminars.
Yeah. To me, back when I met Nelson, you could hear, a radio ad, and it was really just a big agency that just sold, by the way. But you couldn't go on and find 5,000 videos. It could not. You had to go listen to Nelson Nash live somewhere, and that was by invitation only almost. But you had to know somebody who knew somebody.
Yep. Because
he didn't advertise. He went where he was hosted. But today, that's why, or part of the reason that you begin with becoming your own banker, in my opinion. Becoming your own banker, building your warehouse of wealth, and the 6.5 hour digitally accessible Nelson Nash live himself, recording. I think that's foundational. And then, your books, and there's other great books too, but to have all of that information coming at you, it's difficult. If they say IBC and they use a similar terminology, then they're all the same, to the newly exposed to the idea. And it's just not true. We're not all the same.
No, because it's easy to use IBC and then use an incorrect product or teach it incorrectly or whatever.
I got a new bolt on. I love that. We really appreciate what Nelson did, but that was so long ago. Now I've improved it.
Yeah,
wow,
it is.
Okay.
It's hard for consumers, and I'm sure you see it as much as I do, that people come in and they're told they have whole life and it's universal or it's variable. And the life insurance industry has done such a horrible job of using the right terminology. It's
on
permanent.
Purpose,
It's permanent life insurance as the umbrella over whole universal variable indexed. And I've had consumers crying, and they're like, I didn't know this is what I bought. That's not what they said. And they don't know. You start to show them fees and charges and how it works, and they don't know. It's not, and anybody can sell. I've also recently, it really, for whatever reason, it sunk in that not a lot of agents understand the cost to the company and what the company has to do to maintain a book of business or to maintain a policy for 121 years and make sure that they're around. And so a lot of people are talking about stuff that is very superficial, but how does it affect the company? Mm-hmm. And again, anybody can sell a policy, but understanding how companies work, understanding what the client's up against emotionally, financially, that's a big deal.
Yeah. I like the point, too, that you made about language. I think a lot of it's on purpose. They confuse the language or have language overlapping products like, permanent insurance. Yeah, it's permanent, but it doesn't mean it's whole life. Mm-hmm. The same with cash value. In a UL policy, it's an account value. Mm-hmm. I don't care what the statement says that have changed over the last few years. I've seen where these UL stock companies are referring to it as cash value, which you can, I guess, but it's more correctly, in my opinion, an account value. I've
seen this twice. Now, granted, I've only been in this industry in December, it'll be 13 years. You've been around longer than I have because you started with life insurance, correct?
No, I started with Medicare supplements in 87 before they standardized.
Were you selling life insurance though when you met Nelson?
Yes.
Okay.
Yeah.
So I've seen it twice now where they are talking about, they say, yes, I have whole life. And I have them send me, but the policy's collapsing.
Yeah.
And I'm like, what? And so they send me the illustration and it's adjustable whole life.
Yeah.
So there are some policies that actually say whole life that are adjustable. So then I have to reach out to a seasoned veteran in the insurance world that's been around longer than 13 years. Say, what the heck was this product? And so, yeah, you're right. The insurance companies have done some of it to themselves.
Yeah. The interest sensitive whole life, adjustable whole life. Yeah, mm-hmm. Yeah.
Yeah.
I've seen, back in the day, the universal life when interest rates were high, and I was not, licensed in the 80s when interest rates went through the roof, but interest rates were still higher in the late 80s and the early 90s, and people had these universal life policies that they had purchased previously, and they were able to illustrate, 10 and 12%, rate of return. How many of them are out there today? Not that many, but
you see them, but they're on the verge of collapsing.
Yeah, if they're not collapsing, they're on an accelerated path to collapse, right? But the language, and then I agree too that you should understand somewhat of the company philosophy, their financials, because the company's financials matter. If they're going to be here 20 years from now, 50 years from now, 100 years from now, they're probably not going to have the shiniest, flashiest new product, right? Just my comment. Mm-hmm.
But there's a lot of, I talk to agents that I talk about vital signs and they don't know what a vital signs report is.
Yeah.
And vital signs are extremely important to me. I'm looking at them.
I look at them and I, had I don't want to say relevant or be aware, but, I'm active in the industry, in the, kind of what goes on generally. I'm not like an inside guy, but you look at rating agencies and things like that. Most of the time they don't understand life insurance. Right. How can Standard & Poor's, and I'm not trying to beat them up, but how can all these rating agencies give all of these high ratings in the bonds that collapsed in, 2008 and 2009? Mm-hmm. But you do have to look at the financials, and it's, it just is what it is. You have like the hedge fund companies and the private equity groups coming in and buying life insurance and going on right now, buying life insurance companies. they're taking that little bitty old skinny capital and leveraging the fire out of it. I mean, they're buying the life insurance companies because they have capital, right? But then they're leveraging that capital. So the company does matter. Mm-hmm. And a little bit of history, if you can find it, Vital Signs is the one service that gives out the financials. It's helpful. So it does matter. As I'm wrapping that up, it does matter who you work with and who you own, who you're paying that premium to.
And I feel like as an agent, we don't necessarily write with the same company, but as an agent, I can call all the people in all the spots and say, where is this portfolio? Mm-hmm. What does that look like? Because when you look at those reports and you go to other, and there's a lot of money in other, I get concerned and I want to know where it is. I can make that call. You can make that call. There's a lot of agents that can't necessarily make that call, or they don't know to make that call. Mm-hmm. And so companies that have gone by the wayside, when I was looking at Vital Signs, where? How? What are they doing? Their portfolios are very, very similar. How are they paying dividends like this? That just does not make sense. It was warning signs for me as the agent. And it wasn't about what the illustration said.
No.
And so there is definitely a difference with an agent that understands and is involved in the industry. Now, I mean, I'm not perfect. And I don't know, and I don't know everything about it because I'm kind of an old kid on the block at 13 years, but I'm not new like all these people that have been doing it a year, 2 years, 3 years since I've come into the business. And it's really taken off with social media, but I'm still not that 30-year veteran that has been watching it and understands it and has worked in it much longer. That's important, right? It's like we went to Nelson because he was the master. Like, he created it. That is, why would we not listen to somebody that's 80 years old? Why would I not come to James and say, hey, what about this, this, and this? Because you are more seasoned than I am. Never arrive.
No, I agree. And I own the company, one of your major companies, and I pay a lot of premium to them. But when I agree with that, when I read Nelson's book, number one, I just couldn't believe it. I was 14 years in the life insurance industry, and I'm like, what? After you get over being angry, you eventually meet Nelson, you listen to him, and it was beyond me why somebody didn't come up with this idea, this concept, this vision earlier. And I know that, with cash value, there's a loan provision with a life insurance policy. And I know you can borrow against the cash value. I am not talking about that. I'm talking about nobody said, oh, wait, your need for finance is greater than your need for death benefit. And maybe, he just had to go through what he had to go through. Mm-hmm. And it took what it took. But yeah.
I think we're going to see that again, though.
You think
with
so?
Where we're at in the economy. Mm-hmm. Mm-hmm. I mean, have you not seen the shift of, oh my gosh, interest rates are 8%. And now the policy is a great place to go. When I was an idiot 6 months ago, a year ago, 3 years ago, why would I borrow at 4 when I can go at 3, right? And there's times that, yes, I will say, and you may not say this, I will say, well, let's go to the bank then and leave the money in the policy and have it liquid. Mm-hmm. But right now all of a sudden we're heroes because mm-hmm. it's a 4% loan rate or a 5% loan rate. But at the end of the day, we have to sometimes feel that pain before we can see that, oh, maybe when rates were 3%, I should have started a policy. Or people will say, well, I can't now because it's really bad. Well, guess what? Nelson did at the worst of times. So in fact, that's the best time to start because it can't get any worse. If you can start in the worst of times, imagine how awesome it'll be in the best of times.
Mm-hmm. I have seen that and it really doesn't matter. It's where you're at right now. Right now is the analogy of when you want to plant a shade tree, well, as soon as possible. Today, well, should have been 20 years ago, but you didn't. I've seen the thinking, generally it's like, well, it's when the markets are up, I want a higher rate of return, and, I can do 2 times that, 3 times that, 5 times, 20 times, whatever it is, compared to a life insurance policy. I'd never put my money there. And then when interest rates come down, loan rates are down, it's like, why would I borrow from myself? Why would I borrow from myself and pay, interest to borrow my own money? So yes, I've seen that now. Interest rates are going up, mortgage rates are going up, and you know what? Policy loan rates will go up too. Mm-hmm. It's like, okay, well, you can't control that, and neither can I. Did the Fed call you and have a conversation about where you should, where you think interest rates may be or what they should do? No. It's like, okay, well, interest rates go up, the banks go up overnight, right? And then the life insurance companies, the slow as molasses as they are, they'll go up on their loan interest rates. Mm-hmm. And then if they're honest, then the dividends will follow. Maybe not mm-hmm. that year or the next year, maybe the next year. And so none of that you can control, though. You can't control any of that, neither can I. But what I can control is paying a premium. Mm-hmm. Right. And I was talking to a young guy the other day, very sharp, 3 degrees, chilling with engineering. And, we're getting in very good questions, and he's getting into them. And he said, well, I want to know a little bit more than beyond just pay a premium, because the premium is solution. Perfect. As long as that's the foundation, because the premium is the solution. I don't mm-hmm. care what the problem is. And the problems are never ending. I don't care what you do, farming, an entrepreneur, real estate, whatever. These problems are coming at you every day. Yep. The solution is capital, right?
And if you never start, you never build the capital.
Right.
So we're going to start now, and we're going to start slow so the capital can be built. So when we need it, it's there. So I have all these people that didn't start when interest rates were low, but now they want operating and they want loans for equipment. I mean, we have farm lines of credit right now are 8%. I mean, they're going up instantly.
Yeah.
They're getting letters every week or every other week that, your line of credit went up. Your line of credit rate went up.
Yeah.
And so, now they're like, but I don't have enough in the policy, Mary Jo, or I didn't start the policy. Right. Mm-hmm. So you should have beat Parkinson's law, started the policy so that we had something and we could have gone there when rates go up. But we didn't look long term to see that, because everybody is stuck in such a short term view that why would I do this? Why would I do this? I need $2 million tomorrow. You're an idiot because I can't get $2 million tomorrow. Well, no, but did you farm 5,000 acres overnight? Because last I checked, you probably added that over time, And so it's the same thing here. Start it now. Start small, whatever. Add more policies. Nelson at 49. Add the policies.
Yeah.
And then we can get the capital built to then buy. But, when we bought our place, not this last one, but the one before. Not the one that you're talking about me remodeling again. But we went to the bank mm-hmm. and we borrowed money from the bank because I needed the capital to do remodel. Mm-hmm. That was the most painful experience. I mean, it doesn't matter who you are. If you are an entrepreneur and you do not have a W-2 income, they do not know what to do.
They view you as so funny unemployed.
Yes. Yeah. And it was absolutely hilarious that I read Nelson's book again, because you're always reading it, I read it again after we closed on that property. And in that, I don't remember where it's at in the book, but he says interest rate doesn't matter. because you always have your time, and that is not accounted for. And the amount of time I spent sending bank statements from different businesses and personal accounts, and then they lose them, and I'd have to send them again. And then I would have to explain, well, why did you have more money in January than you did in October? Well, because I
sold some.
Exactly. They cannot understand that it's not a level income. Yeah. And I thought, this is exactly what Nelson is talking about. A 3.5% rate or 4% rate for a W-2 employee is going to be a much easier process than a 3 or 4.5% mortgage rate for an entrepreneur who has to give a pint of blood along with everything else to get that loan.
Yep.
So the next real estate we bought, I did not go to the bank. I was like, here's the check. I am borrowing it all, and I'll figure out the remodel later because I am not going through that again. My time has a value to it, and we are not taught to think that way either.
Yep.
So 3.5% is not really 3.5%, and then you have to add closing fees and all the other stuff to go along with it. Yep. So because I figured that in, I think that raised it a 0.5% over 30 years or 0.75 or something. I don't know. But Nelson's right. And you miss it. Yeah. I missed it for 10 years, that tiny little nugget in there, until you go through it. And then all of a sudden, Nelson's right.
Yeah. I understand the cheaper money argument. I get that. And I'll borrow all the money you want to loan me at 3%. I'm cool with that because I can make hay with that. I'm just saying, but it's being dependent upon the third party lender and maintaining control. We like your farmers and the amount of capital that they are borrowing just to finance their operation, need $2 million and okay, but you can start slow, build up systematically on purpose with intent, just to the point where you can maintain control. I mean, you get leverage to the hilt and interest rates change, bank ownership changes, lines of credit limits move up and down. Oh my gosh, they're going to call that note and we'll just close that line of credit and turn it into a time payment. It's okay to have a lot of capital, even though you can't finance 100% of your operation, enough capital to maintain control. What's wrong with that? I mean, isn't that a nice, legitimate place to start? Just how about we have enough capital in our control that we can maintain the leverage? And then, once you go down that path and you see that the cash values do accumulate and you actually do have access to it, your comfort level goes up. Oh, if that goes south over there, I can handle that and that and that. Then your confidence level goes up. And then it's like, Mary Jo, why didn't you, tell me to pay more premium? Right?
Yep.
So...
Yeah, it is. I mean, when we bought our last property, right, the first one, I wanted the money to stay in cash value so it was liquid.
Yep.
So I could pay for remodel because I knew the bank was not going to want to pay for remodel because I didn't tell them I was remodeling. And
how much it was going to cost.
I didn't tell them I was taking the roof off the house. And then the second one, it's giving me an opportunity. I didn't put all my cash there, but it's giving me an opportunity to remodel that before we turn it into a short-term rental because I don't have the income coming in to make a bank payment. So it's giving me the control of what I want to do. I talked to a farmer last week. He was short his land payment, $225,000. Where do you have to go to get that? Line of credit.
Oh, line of credit.
Right. So now his line of credit, he's $225,000 upside down. Well, the only way to to not be upside down is for cattle prices to come up, because he's not a farmer, he's a rancher. So for cattle prices to come up, well, what's the likelihood that cattle prices are going to come up and stay up long enough for him to get that right side back? They're not. And now he has a loan that went to 7% interest overnight with $225,000 more on it than should be.
And he's got another land payment coming up.
And he's got another land payment coming up. So now, instead of him if he would have known about IBC, he didn't. But had he known about IBC, he could have borrowed that from his policy, and we're not risking having to sell land or cattle. Now we have to sell land in order to get right side up. And because we don't have control, the bank is going to start calling notes, because they're not going to keep allowing him. He's at this max line of credit. They're not going to keep allowing it. And so there are times where we want to have some of that capital liquid. And yes, I will use some of it to put a down payment. But if I know I need control of that loan payment, then I am going to finance it all myself. If I know that I can make the payment to the bank, okay. I feel like, and we've talked about this before, I feel like in the world of infinite banking, we are trying to accumulate real estate or something so quickly that we're going to the bank and we don't have the equity. We don't necessarily have the control, because we're trying to buy that real estate and that real estate and that real estate and leverage and leverage and leverage. And what happened to Nelson? He leveraged, hence the book, people. So I'm okay doing that at a slower rate, even though our colleagues laugh at me and they think I'm an idiot. Mary Jo, why are you doing that? Why did you pay cash for that? Why did you, right? Because I'm okay going slow so that I can sleep at night. It's just because some of this comes back to us emotionally.
That's right. Human behavior. I mean, don't jump over that, right? It's like, how much someone has, in the brick and mortar bank, as far as liquid cash capital, that has a drive-through window. You can walk into the lobby and make a withdrawal. That number is different for everyone, and it changes over time. The same if we're practicing this idea and we have, cash value, is all of it collateralized, or 90% of it collateralized, or 50% of it, or 10% of it? That number changes. Your comfort level changes. And, I'm with you. If you can fault me, for two reasons, in my opinion, I speak slow, and I don't use proper English, right? But I'm too conservative, really. I'm too conservative, or I'm very conservative, and I don't use proper English. Okay, I'm okay with that. I look back, I might have missed 2 or 3 deals that I know of, great opportunities, and, but I was leveraged, and I didn't want to leverage that much more. And looking back, sure, they would have worked out. But why am I going to worry about that? It's in the past. And, I took advantage of a lot of other opportunities because I had access to capital that worked out fine. And then I've seen and heard, and I'm sure you have too, where within the footprint of IBC, people say, well, you got to have 100% of your cash value collateralized, working, buying, cash flowing, appreciating assets. No, you don't. I mean, just 100% collateralized, 100% leveraged. Yeah, no.
Yeah, I am with you. I am extremely conservative. Takes me a longer time to start policies than most, even for myself, because I want to make sure I can pay the premium. I want to make sure I can pay loans back. I don't want to get in over my head. I'm just okay being a little bit slower. Yeah. But I am not going to collateralize all of my money. It's just, there's a deal right now that I'm just like, oh, I should do it, But no, it just doesn't feel like the right time, and I'm not going to just do stuff. I'm going to learn from Nelson. Okay, I can either repeat that mistake or I can learn from other people. And I prefer to learn from other people's mistakes.
Yep. I know the talk about timing and feeling if it's right. some of the greatest opportunities that I've taken advantage of was looking around and nobody else is doing it. It's like, what's wrong with this opportunity? And then it's like, I don't know if I can. And sometimes not knowing is good for us. So I'm just saying that at the end of the day, the banker can do whatever they want. You win some, you lose some, you take advantage of some opportunities, you don't. But no sense in looking back and regretting it, right?
But I think emotion comes into it. And so many people want to say, well, here's the deal. Here's the deal. Here are the numbers. Here's the deal. I have clients that, and I did not advise this, but they put money in a policy and then they borrow to pay off their car and their house. And she's very entrepreneurial, wants to start all these businesses. I'm like, what are you doing? Why would you do that? Use the money in the policy to start the businesses. The rate on the car is 2%. The rate on the house is 3%. In that situation, if we want to grow and we're not in over our head. And she said, I don't want to deal with the bank. Yeah. Plain and simple. You know what? That is their right to do that. That's because right. That is what Nelson would say. Never use the bank. And so as an IBC practitioner, I can say, this is what Nelson teaches. This is true IBC. Never use the bank. However, there is also a point where we can leverage if you want to, and we can leave that liquid to go and use the bank if you want to do that. It really depends on your risk level. It depends on where you're at emotionally, financially. These are your options. True IBC is never use the bank, because if you do, as Nelson told me once, you're part of the problem, Mary Jo.
Yep, sign that dotted line and you created that. Money or digit out of thin air. Mm-hmm. But it took him 14 years to get rid of the snakes and the dragons. And he mentions other places in his book. It takes the average bear 25 years, I like cheap money all the time. I've had clients give me a hard time. We bought a new car several years ago, and I think, we financed a down payment out of from a life insurance company. And I think it was 1.9. It was some really low interest rate, right? And so I'm talking with a client. He's a very intelligent individual, and like most of my clients are. And he's like, well, James, why did we put a lot of down, a lot of money down compared to the price. And he said, well, why'd you do that? You're borrowing money at 5 and you could have borrowed all the money at 1.9. And, and it was human behavior. My lovely wife, I'm like, because we make our loan repayments, we borrow, we repay. And it really got down to how much do you want your payment to be? Because I didn't want to have a payment over like 36 months or 48 months, whatever it was. The idea of financing a car 7, 8, or 9 years is just beyond me.
Insane.
And so, here is my time limit, 48 months. And then it's like, Jana, where do you want your payment to be? And that's what dictated how much we put down and how much we borrowed, So, and I'm okay with that. And she could pay it off, if she wanted to.
Did it cost you more interest? Yeah. Did it make for a happy marriage and a wife that was okay with that payment amount? Yes. Yeah,
driving off the lot, driving away from the deal, and you feel all good about it. What's that worth?
Yep. And people don't. Yeah. Sometimes we're so stuck on that number of what it's going to cost me, not how do I want to do it. Because Nelson didn't go to the bank. When he said I was done with snakes and dragons, he was done with snakes and dragons. He didn't care what the interest rate was because he had hurt. He had the pain and experienced it once. I experienced the pain of a loan once. I mean, more than once, but this last time was exceptionally. There's some PTSD there, possibly. But there is.
You may be rated on that policy, on the next policy you finally get around to buying.
You know how women say you forget the pain of child labor? Like, that may have subsided faster than this pain.
Wow. You're traumatized, huh?
Yeah. But financial PTSD is a real thing.
No question.
It absolutely is a real thing. And so when people go there, like Nelson, he didn't want to go back. And that was Nelson's 100% belief. And so when some people come in and say, well, You're paying more. Yes, you are going to pay more to your company, but you have the control. And that is what Nelson was talking about. That is what IBC is about, liquidity control and guarantees. That's simple.
But that you're paying more to the company in the low interest rate environments. Let's let the interest rates continue to go up. And then that paradigm shift changes or, it's just an arbitrage.
So for 10 years, that's what we've heard.
No question. Yeah.
And now, that's why I say now we're not the idiots.
Right.
But for the last 10 years, we've been the idiots. And they've played this game
I don't self-identify as an idiot.
They've played this game of that we don't know what we're talking about.
Look at what the market's doing. Look at what this is doing.
We're not looking at some of the emotion behind it. What have people experienced financially? Yeah. If they have financial PTSD, that's a real thing. And I said that, I talked about it in a podcast of mine, and I got emails and people were like, that's real. I didn't even think of it that way before. Like when I started this business and I had no money because people didn't believe what I was telling them, I still open my bank account today and I got plenty of money in there, but I still don't like to go. I do not like to log into my bank account because I get like, I can just feel like my muscles get tighter, even though I know there's money there. Financial PTSD, people that were broke at one point, people that had struggled at one point. Some people don't forget that. Some people repeat it. Sure. And they just make money and go broke and make money and go broke. And then there are people that are going to live from it. And those people may not care what the interest rate is. They want the control.
Yeah.
It's just that simple.
Physiological response of opening up your online accounts. You can ask my wife. You can ask Jenna, talking about being uncomfortable. The first property that we closed on, we were young, broke, and I'm squirming in my chair, and I didn't realize it until after we're done. We got the loan, and she's like, my gosh, man, you're slithering and squirming all over that chair. And it was exactly what you're talking about, just a physiological response. And the uncomfortable feeling that here, I'm going to show you all of our weak numbers. And then it's like, you're going to pull up a credit score and judge me. And, I don't know, you've been broke a time or two, or you've had things called or repossessed, things go wrong. This idea of becoming your own banker and that control of the banking function, all of a sudden has a new ringing in your ear.
Amazing.
But that PTSD, that reminds me of that. Just ask her the next time you see her, and she'll laugh.
And being at the closing table when this is so funny. We went in to buy this most recent property, and we signed a couple things, and it took maybe 5 minutes, and she's like, "Okay, you're good to go." And my husband goes, "That's it?" And she goes, "Cash is king, man." Yeah. Because you're there for half an hour when you have to do loan paperwork. And it was in and out. And it is a whole different environment. And what do you save? I don't know if I told you. I think I told you this last time we talked. But that property that we bought, we saved $100,000 off purchase price because we had cash to buy that. Mm-hmm. So let's talk about interest rates.
Yeah, there you go.
And where the difference is, right? I could have still got a 3.5% or 4% loan at that time. No, I'm sorry, it went to 6%. So I called the bank. Oh my God, this is good, James. I called the bank and they said, "Oh, well, we could get you a cheaper rate if you want to put some money in a CD and we'll use CD as collateral." Yeah. I said, "Well, welcome back to 1980. We're using this.
And they were born
tactics.
In 1991.
Exactly. They don't. Well, my loan officer, she does. She's my age. But at the end of the day, you've got people that don't even know what a CD is anymore, right? Mm-hmm. And now they're using that tactic again to get a lower rate. But I just saved $100,000. And I have the control and the flexibility. If I would have not been able to offer cash on that deal, there is no way they would have taken my offer. There is no way. 100,000 less. That's insane.
And close, I don't know. In cash, it's you can close pretty quickly.
Oh, we closed in 14 days.
Yeah.
I bought 2 properties that way. I'm like, the first one I wanted to close in 7, but they're like, can we get out?
Yeah.
I'm like, well, can't you get out in 7 days? Come on.
It's like, wait. we don't do paperwork that fast around here.
I got someone to get in there. Let's go. Yeah, but that gives you power. And I think a lot of people miss that because now even our first property, instead of us waiting 3 months to close, I had a renter in 4 weeks.
Paying 2 months worth of payments. Yeah.
Yep.
Yeah. I know the last deal that we did with the bank or a lender, third-party lender, it was, 2 years of tax returns, 2 years of this, 2 years of that. And, where are you getting the down payment? It's like policy loans. And they're like, can we see them? And of course I said yes. And they seen some of them. But, and there was a whole story of why we did what we did. And it's worked out very, very well. But we have control, right? Mm-hmm. So, but he said, James, I've heard of people talk about this, but I've never actually seen anybody do it at this level. Mm-hmm. And I'm like, yeah, there's people all across the country doing it at this level. And here's it's an ag lender, right? And, the president and the vice president, and they're all like looking, and I'm like, it's really not that complicated. It's so not complicated, and I gave them a bunch of books. They asked for them. They're like, how do you do this? And I give them all the books, and I'm like, don't just read it. And, if you have a comment, great. And I'm not, and do you think they read the books?
No.
That they asked for? I should have charged them double for it. I'm just saying but they
put interest on it until they call.
Yeah. It's like you walk into a cash deals in the real estate down here, in Fort Worth, North Texas, $200,000 or $400,000 deals. They happen every day, all day long, California money or wherever. But the majority, real estate transactions are not cash deals. Mm-hmm. And they almost don't know how to, no, we can't do the paperwork in 7 days because it takes us 14 days. That's as quick as we can get the attorneys to move on the documents or what. It's just foreign to them.
Interesting. Yeah, I haven't had any problems where we're at, but it definitely gives you the leverage. And I found it very fascinating because now we bought this other property. And so I said, well, I just want a line of credit against it. So I have access to cash if I need it. Mm-hmm. Well, 2 years ago, we bought our property. And now when we bought this property, I'm like, you only got 3 lines there for life insurance. I need a few more.
Right.
And so then I have to go to comments. In the comment section, I have to fill out all this life insurance. Yeah. I did on this last one that I filled out. I just say, okay, this is how much I have on me. This is cash value. This is how much is on my husband. This is cash value. This is how much is on colleagues. This is cash value. And it's almost sad though that there's only 3 lines. Even if we're not talking IBC, you only have 2 policies for life insurance because you're guaranteed to not get out alive.
Right.
And so why don't you have more, even if it's term?
Because it's life insurance.
Why have you not added to the term over the years? Yeah. Your value of your life has increased. Why are you not adding to it? But yeah, they didn't have any comments for me. All I said was when my PTSD example happened and I had to keep giving them stuff, I said, you just keep doing what you're doing because that just makes people read the book. Yeah. So, I'm happy you just keep being inefficient.
Right. Ask me for one more thing and I'm out of here.
But because they make it so painful, people are looking for IBC. Yeah. And people that are buying, this is what I hear is, the rental property, the short-term market is just expanding exponentially. Yeah. And we weren't looking to get into it. We just ended up falling into it with this property. But they are borrowing and borrowing and borrowing to the point where those podcasts are warning people not to borrow the way they're borrowing and don't lie to your lender. And they're concerned that they're not going to get loans on short-term rentals the way some people are buying them because they're doing it in such a quick manner, expanding so quickly. And it's going to be a problem.
A banker's never seen a bad loan, right? They can't lend money.
Depends how old they are.
Look, did that experience, the last couple, help you with your PTSD?
No. I'm okay having it because it reminds me where I was.
Yeah.
I don't look at it as a bad thing. I know that it's there. I'm far riskier. Like if we look at where I was to where I am, right? I am confident now that, we're going to be okay if we do this deal or that deal. But it's also a good reminder that, hey, things can go backwards. And so don't get out of control.
Yeah.
Where some people have the mindset of, I was there, big deal. I got out of it. I'll just go back there. I don't care if I have to file bankruptcy. I don't care about X, Y, and Z.
Yeah.
Because you see people, some of your big, huge motivational speakers, they'll go from here to here and they don't care. They'll just keep rebuilding. And no, thank you.
Yeah.
I don't want to rebuild. I'll just build slower. But it's still there. But I think and I also think it helps just to be able to relate to a new client who is there and to say, hey, you know what? You got this. Like you're not going to be here forever. Don't beat yourself up because of what you did, just like you said in the beginning. Don't beat yourself up of what you did because we can only go forward from here. And you didn't know what you didn't know. So let's move forward. I
agree with that. It's quite often, it helps when you've done it, and it works. Got a lot of clients that do it and it works. You got to have some discipline. There's no question about that. But it's very rewarding to see people, the lights come on, they do their vetting process and they put their hand to the plow and then they do it. And there's a way out and they're suspect or, concerned and it's like so rewarding to watch them look up in 1 year, 2 years, 5 years, 10 years, whatever it is, and look back and they're like, oh my God, I did not think this was possible to this level. It's like, what's that worth? It's very rewarding.
Yeah. And to be able to help them and teach them that other people aren't doing, right? Because they're just wanting to get out of debt. And they want to, and I just have a lot of Dave Ramsey fans as clients for whatever reason, and I love them because they're so concerned about getting out of debt and they have all their finances and they understand budgeting. I love it. But I'm like, why are we paying off that car when you are telling me that you want to create cash flow? And they're crying. They're literally crying because they cannot get out of debt to take the next step. And then we get to give them permission. It's okay because Dave doesn't know. It's okay. Let us help you create that wealth and show you how to do it. And don't beat yourself up. Like you didn't know. You don't know how credit cards work because nobody taught you that.
Right. I love that too. What's a loan interest rate on that? Well, what's a loan interest rate on your line of credit and your credit cards? No, it is, like I said earlier, it's just very rewarding watching people build something that they own and control. Just, oh my gosh. They make it careless what interest rates are. And
then deliver the death benefit. Like that is one part of the business that I never thought about until I had to do it the first time. And now that I've had 4 in the last year.
That's a lot.
That is a lot. Yeah. And it is, I call it, Nelson talks about the seen and the unseen. And that's not what he talks about, but I call it the unseen that we as IBC practitioners don't talk a lot about. because it is life-changing to be able to deliver that death benefit and know that they would have not had that had they not met you, had they not had IBC. You know, sometimes we get hung up on the cash value and borrowing it, and though it's not part of death benefit and that misunderstanding of that. But like, I just lost a client in July. We haven't delivered the death benefit yet because the policy was not 2 years old. So it was contestable. And then they had autopsy, but she was 32 and pregnant. And so mom and baby were lost. Calling and saying, and I was able to tell him how much death benefit there was. And it's crazy, James. I have no idea. Like, I know you guys aren't big term fans, but I will put term on my policies.
We ride term all day long.
And so, like a term rider. Yeah. And so I have no idea why I put that much term on. Because there can be
more on that one than you normally do?
Yeah. Like, because sometimes, term can hurt a policy too. Right. So you have to have the right amount. Too much is bad. Too little is not going to do what we need it to do. And so there's a happy medium in there. Yeah. Why I put extra on hers, I have absolutely no idea. Not a clue, but I did.
Well, lucky her. I know.
Right. I mean, all I can say is it was a God thing.
Lucky them.
Right. No luck involved. He's like, Mary Jo, thanks for taking care of me. That's unbelievable. Yeah. I'm like, well, I wish I could say I did that on purpose, but I can't even. I would have to look back at our meeting because I record them all. I would have to look back to see why I did that. And she was so young, 32. Yeah. So it's not, the term maybe didn't hurt it. So I thought, well, whatever, let's just leave it on there. It's not affecting cash value at all. But when you deliver those, and I deliver them in person. So when you deliver those and you sit down with the family and you talk to them, that's a big deal. Yeah. It's the unseen of what we do.
I know Julie has been here probably 15 years. And early on, talk about PTSD, she took a phone call from a client who had just lost a spouse or someone. And she's like, didn't know what to do. It was new. She'd never done that. And I don't know, it was, 15, 14 years ago. And she was shaking. Mm-hmm. And, there are things that have to be done. And I'm like, Julie, we're in the life insurance business. Mm-hmm. But it was a shock to her, and I want to say too, excuse me, the death benefit is, I think, overly diminished in the infinite banking world. Mm-hmm. Because if you're if you have obligations, you have a family, it's okay to insure the greatest asset that you are, because you are your greatest asset. It's okay to be insured properly. Mm-hmm. There's no question, you practice banking, you're going to wind up with more death benefit than you sought to purchase.
It's unbelievable how much more. Yeah. And here's the other thing that I have come to learn is when I delivered my second claim, my first one was local, so that was no big deal. But the second one, I drove to Kansas and physically delivered the check and sat with the family for a day and a half. And it's unbelievable that they had another policy and the agent, no phone call. They called that company and then they called me and said, what do I need to fill out? Yeah. Mm-hmm. The agents are either not there or still there and frankly don't care, because now the death benefit check gets sent and we're done with you. Mm-hmm. And the amount of paperwork, like I've had I think this was my second I've had 3 of them that are contestable, that they've died within the first 2 years. The amount of paperwork that goes out, and then the company sends the paperwork to the beneficiary or next of kin, and then I have to call the company and yell at the company and say, what are you doing? These people just lost a loved one. They have no idea what they're supposed to fill out. they can't even think straight. And it was crazy to me that all agents don't do that. Absolutely crazy to me. And so you have to have an agent that cares.
You mentioned the incontestability or the non-contestability clause. If someone dies in the first 2 years of all life insurance, the company has the right to contest the claim within the first 2 years. So, and that clause will just say we're not going to contest a claim after 24 months or after 2 years. And so most of the policies that we write today are fully underwritten up front, right? And so during that time period, if you graduate within the first 2 years, the company is going to investigate to determine that you were, in fact, honest on the application, that there is no material misrepresentation made on the application. And then every company, it's in your life insurance contract, a company has 6 months to pay a legitimate death benefit, to fulfill a loan request, right? To fulfill a withdrawal from a life insurance policy, cash values, PUAs. So it's not that big a deal that the company is just doing their due diligence to make sure that is in fact a legitimate claim and there is no material misrepresentation. And then to go on, if they did find that there is a material misrepresentation made on the application that would have prevented them otherwise of issuing that policy, then they'll rescind the policy and they'll send that beneficiary or whomever the next owner would be, their estate, whatever. They'll send all the money that was paid back in the form of premium with a nice letter that says it's as if we've never met. Yeah,
they'll just do return of premium essentially.
Yeah,
right.
They just return premium.
And it's not that they're looking for a way to. This is what people misunderstand. They're not looking for a way to not pay premium.
Exactly.
They are looking for every reason to pay premium. And in my cases, I mean, I've apparently just gotten really lucky, but they will go back and just order medical records, a few more years of medical records, and they're not doing a whole lot more than that I'm aware of. But there are people that will, and I tell people, I'm like, if you are a tobacco user and you tell me you're non-tobacco and then you wait 2 weeks to have some clean urine and they go back and you were at the doctor 5 weeks ago and it said you were a tobacco user, that claim is not going to get paid to the fullest extent. They're going to pay it as a tobacco user, but not as a non-tobacco user. Is it really worth lying over so you can have a little more cash value? You choose to use tobacco? Sorry, you did it to yourself. It is what it is, right? My husband's a tobacco user. I have to pay those premiums. I am not going to lie about the fact that he is not a tobacco user.
Yeah.
It's the risk that we take. But the companies, I think this is another thing that people talk about, or like a little bit of a noise out there that, companies are looking for ways to not pay because apparently along the way somebody didn't pay. Well, I don't know. It's not my company. My companies are paying and they're happy to pay. They're only questioning it. I had somebody die at 25 months and it was within weeks of 25. I was like 24 months and 2 weeks or something.
Wow.
And they sent a letter thinking it was contestable, right? Because they didn't do the math. And then I got, the letter went out and like 2 days later, I got an email that said, hey, your client's going to get this letter. It is not contestable. We missed the date. We, incorrectly did whatever they do. And they're not. It was 25 months later. Nothing contestable there.
Yeah.
Not that it wouldn't have come back. It just takes a lot longer to issue that death benefit, a lot more paperwork. But your agent needs to take care of you and help you through that.
I remember one time early in my career, had a gentleman that graduated. The policy was issued at a particular age, and he was born in his home and didn't have a birth certificate, which is not that uncommon that long ago. May sound weird today, but they got his military records, and so the Army or whomever issued him a birthday. Right. He didn't have a birth certificate, and they're like, well, this one when you were born, son. And so the company used that, and it was different. So all they do is go in there and adjust the premium, and the death benefit, but, it's still paid.
Yep.
But
I've heard stories too. Like, we have a colleague that he had a client that took a policy out on his son, and his son lied that he didn't do drugs. Paramed came back. Everything came back great. And he dies of an overdose, and the company does not pay. And dad was upset.
Yeah.
But he lied and said that he wasn't doing drugs. And obviously there was something in that because it was contested, in the contestability period. Yeah. So obviously there was something in medical records that showed that, and dad maybe didn't know because of HIPAA. Yeah. And the kid was in college. And so they have every right to not pay that.
Yeah.
So I always tell people, if you have kids that you want to insure, do it before they start doing drugs. Because we don't know if and when that's going to occur.
Yeah.
And so do it while they're still at home. But please, it's not worth lying on a policy.
Yeah, that would be an awkward conversation, children or not children, not minors, right? But young adults.
Yeah.
Parents are buying policies and come to find out, they vape or smoke, but mom didn't know that. Well, that's a conversation that you're going to have with your mom and your dad.
Or antidepressants. We have a huge issue right now with lots of young people that are just newly diagnosed with depression, anxiety. They're non-insurable if that's been in the last year or two that they're on meds. There's not enough stabilization. Well, now we want to insure the kid, but mom and dad maybe don't know that. It's kind of like...
Mom and dad doesn't know that the kids are on antidepressants?
Well, not if they're young adults.
Okay, right? I got yeah.
Or you have that conversation where you've had these meetings, I'm sure. Oh, we get to the point where we're going to decide what we're going to do with the policy, and somebody comes back tobacco, and the other spouse didn't know.
Oh, the spouse didn't know.
No, the spouse didn't know. You've never had a meeting like that?
No.
Yeah, I've had a couple now. Yeah. I'm like, well, you came back tobacco. I don't smoke.
Oh my gosh. And I'm like, and the wife sitting there like, yeah, he doesn't smoke.
It was the wife.
Oh, the wife smoked. Oh.
And I'm like,
well, whatever, yeah.
I don't know if I bailed her out or what, but I said, did you perhaps chew Nicorette?
Are you trying to help her out?
Well, I wasn't trying to. I'm just like...
No, that wasn't disclosed
either. A lot of people think that Nicorette, or like my husband's a chewer. Mm-hmm. And so if you're chewing, what's it called? Zyn, that is a cinnamon nicotine pouch. And so that is still nicotine, but they think it's not tobacco.
Yeah.
So it's not going to come back. Or vaping. I've had people come back. We ask, are you a tobacco user? Nope.
Yeah.
But you're vaping, it's still tobacco. And so all the new fun stuff is still show up.
It used to be non-tobacco rates, tobacco, non-tobacco rates, but now it's nicotine. Yeah. Because all of that, I don't care what the product is, it's just a delivery system for a drug. Mm-hmm. The drug's nicotine, whether you smoke it, chew it, dip it, vape it, whatever.
But there's a lot of reasons people think, if you're going to insure a young adult and you don't quite know what they're doing at college or wherever they're at, because it's really none of your business because they're adults, you have that risk.
Yeah. Have you had, since you've had these great, wonderful conversations and meetings, have you had one where the spouse comes up positive in some kind of a drug use situation where the other spouse didn't know? And I don't want to put you on the spot.
Not drug use. We have had, we did find out that edibles are treated differently than smoking marijuana. Edibles are non-tobacco with my company anyway.
It depends on the company, right? The company's view of
edibles cannabis. With my company are non-tobacco. Don't be calling me if you got drug use. I'm not proponent of issuing all these policies with marijuana, but call James. But
we can take care of it. No problem.
That is different. But I have not had. I don't have a lot of drug users. No.
Good. I mean, it's like they say the underwriters say, well, there's not enough data on cannabis use, on the edibles, right? Smoking is smoking. Vaping is worse than smoking. I don't care what you smoke. Even there's nicotine in the rolling papers, right? So even if you have a company that is neutral, not cannabis friendly, but cannabis neutral, right, you could still test positive because of the nicotine in the rolling papers for nicotine. But then there's companies that their philosophy is like, no, we're not doing any edibles, or I don't care if you smoke it in a pipe, a bong or an edible or whatever. And then they typically say, well, there's not enough data to show, positive results from long-term cannabis use. I'm like, perfect. It could extend your life for all I know. I don't know. But it gets down to really company philosophy. Some look at it one way and others look at it another.
And your actuaries and your underwriters and who's talking to who. And I mean, I have talked to physicians that are proponents of marijuana, and they say smoking it is worse because it goes through your lungs and your liver differently than if it is edible. And the effect of it is different in the body. And I've had people say, oh, it doesn't matter. But all in all, most life insurance companies, I've not seen one not issue for marijuana.
Oh,
and so they will. Well, I've always, any company that I have talked to, if you are using any type of, and I'm going to not call it cannabis so much just because there's the THC levels, but if we're actually smoking a marijuana type product, most of the companies that I've talked to will do tobacco.
Yeah.
And I've asked why. Like, how are you rating it? And they've basically told me, well, we don't really have enough evidence or research or history to know what it is. We just know that, this is the example I was told, we just know that if you're high, you're probably going to not be able to pull your arm out of that PTO fast enough to not get wrapped up in that PTO. So you're going to do more dangerous things, then it's not necessarily going to, the drug itself isn't going to kill you. But you might do some stupid things that will kill you. All
right, farmers, look, don't be running your equipment smoking marijuana. Right? Is that what I'm hearing? Yeah, it's
and just don't growing it is worse, because if you're going to grow it, we can't take premium.
Yeah, okay, as a grower or a seller or distributor of legally grown,
smoking
cannabis.
It's easier than growing
because it's federal. It's against the law federally, and the life insurance companies are regulated by the state. So is marijuana, right? Cannabis across the country, it's all regulated by the state. So you can buy it here, you can grow it there, but it's federally illegal. So the life insurance companies don't want to deal with the money,
right? Because it's money laundering for us,
right? Under the federal banking laws, it's difficult for them. They can't do it. Yeah. So
hemp is okay. I've gone head to head with the company on that.
Yeah.
Where I have lots of hemp growers and they're like, whoa, that's marijuana denied. I'm like, hemp and marijuana are not the same thing.
Right.
And so you may have to educate the company on farming because they don't know anything about it.
Well, you can smoke too much marijuana. You can have too much cannabis, THC in your blood. I mean, so.
Well, I would not know this, James.
Huh?
I would not know this.
I would. Because, you may have a company that is, cannabis neutral or friendly, where they'll offer non-tobacco rates, even if marijuana is smoked, right? And I go, marijuana is from history. It's, to me today, it's cannabis. But if you're sitting there smoking, 5 joints a day, that's going to be too much for even those that are marijuana
the
neutral.
level will be a different. You're saying they'll deny based on level.
Yeah, they won't issue because.
But there's risk.
Yeah.
At the end of the day, the life
Now, that's a
insurance
guy
company,
who wouldn't pull his arm out from the PTO or whatever.
But there's risk. The insurance companies are looking at the risk. So many people forget, and me included, as a new agent, I would get mad. I'm like, why aren't they just insuring them? Because there's risk. And guess what? I'm an owner of that company now, and I don't want them to make silly decisions. I want them to be there for the next 121 years. So I'm okay with them putting that risk on there and somebody having to pay for it. Just because we don't think it is, we're not the actuaries. We're not pricing it. We're not looking at health records. That's their job.
It's like, just because I can pay a premium, you should issue the policy. Yeah, it doesn't work that way.
No.
All right, listen, we've gone almost 2 hours. So that's long enough, huh? Is there anything you want to share before we close? Or
I don't think so.
Okay, well, listen, thank you for coming down and spending time. Greatly appreciate that.
Thanks for having me.
Yeah, you're welcome. Okay, thanks for listening. Have a great day.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.